In a world where economic landscapes are rapidly shifting, a new form of wealth has emerged. From the shadows of the digital realm, cryptocurrencies have risen as the new frontier of finance. A frontier that's vast, untamed, and filled with possibilities. But like every frontier, it has its own origin story, a genesis that set the stage for an entirely new paradigm. The year was 2008. The world was in the grip of a financial crisis. Trust in traditional banking systems was dwindling, and out of this turmoil, a white paper surfaced on the internet. Penned by an anonymous individual or group using the pseudonym Satoshi Nakamoto, this paper introduced Bitcoin to the world. But Bitcoin wasn't just another currency, it was a radical departure from established concepts of money. Bitcoin was designed to be decentralized, meaning it wasn't controlled by any government or financial institution. It was digital, existing only in the virtual realm, yet it could be used to buy real-world goods and services. And it was scarce, with only 21 million units ever to be created, making it akin to digital gold. But the most revolutionary aspect of Bitcoin was its underlying technology, blockchain. This technology allowed for secure, transparent transactions free from the control of any central authority. A truly disruptive concept that challenged the very foundations of our financial systems. All these features combined to make Bitcoin not just a digital currency, but a potential game changer in the world of finance. It was received with mixed reactions, excitement and skepticism, enthusiasm and apprehension. But as we now know, this was only the beginning of a new era. This wasn't just a new currency, it was a revolutionary idea that challenged the very concept of money. It was the genesis of cryptocurrency, the dawn of a new financial frontier. And as we move forward, we'll explore how this frontier has evolved and expanded, shaping and being shaped by the economic landscapes of our time. At the heart of Bitcoin is blockchain, a technology that records transactions across several computers so that the record cannot be altered retroactively. Now, let's delve a little deeper into what this technology really is. Imagine a giant global ledger that records every transaction of a particular asset. This ledger isn't stored in one place, but is distributed across thousands, if not millions of computers worldwide. Each transaction is added to the ledger in a block and linked to the one before it and after it, creating a chain, hence the term blockchain. But here's the real kicker. Once a block is added to the chain, it can't be changed or removed. It's permanent, transparent, and traceable. This permanency is what makes blockchain so revolutionary. It eliminates the need for trust because it's practically impossible to cheat the system. Blockchain technology is not just about maintaining transaction records. It's about creating a system where no single entity has the power to manipulate the records. A system where you don't need intermediaries like banks or governments to make transactions. It's about democratizing finance. Let's think about the potential of such a technology. It could revolutionize not only how we handle money, but also how we manage records, contracts, and even identities. It could bring about a new level of transparency and accountability, a world where corruption and fraud are significantly harder to perpetrate. But it's not without its challenges. The very features that make blockchain innovative also pose hurdles. Its decentralized nature raises questions about regulation and legal jurisdiction. Its transparency might conflict with privacy concerns. And the energy consumption of maintaining such a vast network of computers is a pressing environmental concern. Yet its potential outweighs its challenges. And as we continue to explore and refine this technology, we are likely to witness an evolution in its application beyond cryptocurrency. This innovation promised security and transparency, shaking the foundations of traditional banking. With blockchain, we are not just shifting from physical to digital, we are redefining the very fabric of our economic system. Over the years, cryptocurrencies have seen astronomical growth. It's a tale that's as riveting as it is complex, filled with twists and turns that have kept the world on its toes. This isn't just about a new kind of money. It's about a shift in perspective, a transformation of the economic landscape as we know it. The rise of cryptocurrencies started with a whisper, an underground movement among tech enthusiasts who saw potential in the power of blockchain. They were the early adopters, the pioneers who held onto their digital assets with a tenacious grip, even when the rest of the world was skeptical. Their faith in the potential of this new form of digital wealth was unshakable. But as the years rolled on, the whispers grew louder, reaching the ears of major investors. Visionaries like Elon Musk and institutions like Goldman Sachs began to take notice, adding fuel to the fire of the burgeoning crypto market. The value of digital currencies like Bitcoin and Ethereum began to soar, reaching dizzying heights that few could have predicted. This was more than just an investment trend. It was a digital gold rush, a race to stake a claim in this new frontier of finance. Millions of people around the globe were drawn to the allure of digital currencies, hoping to ride the wave of this financial revolution. But with popularity came scrutiny. Governments, financial institutions, and skeptics began to question the legitimacy and stability of cryptocurrencies. Yet despite the controversies and uncertainties, the allure of digital currencies remained strong. The meteoric rise of cryptocurrencies is a testament to our ever-evolving world. It shows us that change is not only inevitable, but also exciting. It's a reminder that innovation is at the heart of progress, pushing us to rethink and reimagine what we know. From tech enthusiasts to major investors, the digital gold rush has drawn millions, all hoping to be part of this financial revolution. They've seen the potential of this new form of wealth, and they're ready to venture into the unknown, to stake their claim in the digital frontier. Because in this new world, the only limit is the sky. But this journey hasn't been without turbulence. As we dive deeper into the uncharted waters of cryptocurrencies, we encounter the tempestuous nature of the crypto market, infamous for its volatility. It's a roller coaster ride that has seen the value of digital currencies like Bitcoin fluctuating wildly, reaching dizzying heights one moment and plunging into the abyss the next. Imagine, if you will, the exhilaration of riding a wave that catapults you to unprecedented heights, only to be followed by a precipitous fall that leaves you gasping for breath. That's the kind of thrill and trepidation that has become synonymous with the world of cryptocurrencies. Each wave represents fortunes made and lost. There are stories of overnight millionaires, those fortunate souls who rode the wave at just the right time, their digital wallets swelling with virtual gold. But for every tale of meteoric rise, there's a countertale of dramatic falls. Investors who had hoped to surf to wealth only to wipe out when the wave broke. And then there are the whales, the big players who move vast amounts of cryptocurrency, and whose actions can cause ripples that turn into tsunamis. Affecting millions of smaller investors, their actions add to the unpredictability and volatility of the market. This wild fluctuation raises questions about the stability and sustainability of cryptocurrencies. It's a concern that has drawn the attention of governments and financial institutions worldwide. Just like a surfer trying to conquer an unruly wave, they grapple with understanding and regulating this new form of currency. Cryptocurrencies operating in the digital realm don't adhere to the boundaries of nations or the traditional rules of finance. This creates a unique challenge for regulation. How does one control something that is inherently designed to be decentralized? How do you protect investors without stifling innovation? These are the questions that governments and financial institutions wrestle with as they navigate the turbulent waves of this digital revolution. Governments and financial institutions worldwide grapple with how to regulate this uncharted territory. Cryptocurrencies are more than just a fad. They're reshaping how we think about money. A profound shift is underway as these digital currencies are starting to make their mark on the global financial stage. Imagine a world where sending money across the globe is as simple as sending a text message. This is the promise of cryptocurrencies. They're breaking down barriers, making international transactions faster, cheaper, and more accessible than ever before. Cryptocurrencies are also democratizing finance. They give individuals who don't have access to traditional banking systems the opportunity to participate in the global economy. In regions where the local currency is unstable, cryptocurrencies offer a more secure store of value. But perhaps the most significant impact is on businesses. They're not just accepting cryptocurrencies as a form of payment, they're also leveraging the underlying blockchain technology to improve transparency and efficiency. Take the supply chain industry, for instance. By using blockchain, businesses can track products from the factory to the consumer in real time, ensuring authenticity and reducing fraud. Even Wall Street is feeling the ripple effect. Cryptocurrencies are ushering in a new asset class, attracting institutional investors and sparking a wave of innovation in financial products and services. Yet, as the lines between physical and virtual assets blur, challenges arise. Regulatory issues, security concerns, and the technology's steep learning curve pose hurdles for widespread adoption. However, as we've seen with previous technological revolutions, These challenges are often the catalysts for innovation and refinement. In the end, the rise of cryptocurrencies isn't just about digital coins or making money. It's about the potential to create a more inclusive, transparent, and efficient global financial system. Businesses, large and small, are starting to accept digital currencies, blurring the lines between physical and virtual assets. This is more than a trend, it's a testament to the transformative power of technology and the indomitable spirit of innovation. As we gaze into the future, the potential of the cryptocurrencies is limitless. We stand on the precipice of a new era, with digital currencies promising to revolutionize the way we transact. From micropayments for creative content to remittances sent across the globe, cryptocurrencies could make transactions faster, cheaper, and more accessible. Imagine a world where the barriers to entry are shattered, where anyone, anywhere with an internet connection can participate in the global economy. Cryptocurrencies could also play a major role in the world of finance. Smart contracts, powered by blockchain technology, have the potential to automate complex financial transactions, reducing the need for intermediaries and streamlining processes. And let's not forget about tokenization. This concept could allow for real-world assets, whether it's a Picasso painting or a prime piece of real estate, to be divided into digital tokens. This could democratize investment, allowing anyone to own a piece of valuable assets that were previously out of reach. But as we peer into the crystal ball, there are still clouds of uncertainty. The potential of cryptocurrencies is vast, but so are the challenges. The volatility, the regulatory concerns, the technological hurdles. These are all issues that need to be addressed. And then there's the big question. Will cryptocurrencies replace traditional currency? It's a possibility that has been debated by economists, technologists, and futurists alike. Some see a future where Bitcoin or another digital currency is the norm. Others see cryptocurrencies as a supplement, rather than a replacement for traditional currencies. There are no clear answers yet. The world of cryptocurrencies is still evolving, still maturing. But one thing is certain. They have the potential to transform our global economic system. They've already begun to do so, and it's a trend that's unlikely to reverse. Will they replace traditional currency? How will they transform our global economic system? As we venture into the future, these are the questions we must grapple with. This isn't just a story about money, it's a story about the future of our world. As we conclude our journey into the world of cryptocurrencies, we invite you to join the conversation. What are your thoughts on the future of cryptocurrencies? Do you see them as a replacement for traditional currency, or perhaps as a supplement? Have you had any personal experiences with cryptocurrencies that you'd like to share? Let's discuss in the comment section below. If you found this video informative and engaging, please give it a thumbs up. Your likes help us reach more people and spread knowledge. And don't forget to hit that subscribe button. Join us on Docu Explorers, your go-to channel for insightful documentaries on emerging trends and technologies. Thank you for joining us on this journey. Until next time, keep exploring.